everyone's like, oh, bear market, it sucks. Well, yeah, if you're like a long-term investor, it's bad. And that's where I think we are. We're going to be in this kind of like sideways Brazil type market where Brazil had this crazy move up from like 2002 to 2008. And then since then, it hasn't made a new all-time high since 2008. So again, I don't know if it'll be 14 years before the US does, but I bet it's close to 10. And I think, again, you're going to see this sideways move. But going back to what I was saying is that within bear markets, the best opportunities arise. I mean, what basically crypto is going to do, what the stock market's going to do, what the dollar is going to do, everything's going to revolve and has been revolving around the Fed. And I mean, as of now, I think yesterday per the stats, it was an 88% chance of a 75 basis point hike. So the market already expects that, right? So the market expects 75. What the market's trying to figure out is what are they going to do after? And there's kind of this hope that they're going to take a pause for a few months and see whether or not the economy is supportive of further rate hikes. And that's kind of why we've rallied off the lows, at least in the S&P 500 over the last month or so, and with this hope that we do see this kind of pause. But what's interesting is today, we saw the markets open up. The S&P was opening sharply higher, and then some JOLTS data, which is some jobs data, came out, I believe, job openings, and the dollar started to rip because it was a strong number. And again, you could see this market kind of flipping back and forth between what's the Fed going to do? What are the likelihoods of a pause versus not a pause? So it's going to be really amazing to see tomorrow. I do think if I had to guess, I'm favoring a pause, not so much because of the U.S. economic data, but because we've seen other foreign countries get very close to catastrophic issues. Like we know the UK pound was collapsing and the Bank of England had to jump in. Then we saw a couple Fridays ago, the Bank of Japan had to jump in to support their currency. And so my fear would be that if the Fed continues to hike, eventually they're going to break other countries. And I think that's a concern for the Fed. Yeah. Yeah, I definitely, that's kind of where I am, where it's like, and I gotta believe the Fed knows this, but we know that like it takes a certain amount of months for every rate hike to be reflected in the economy. And so considering we've done 375s already and tomorrow would be four, how many of those have actually filtered into the economy? And is the Fed starting to get nervous that they might overdo it and then cause kind of a bigger recession or worse? And I think that's, at least for me, that's my big concern is how much front loading have they done? And then if they keep doing it, at some point, things do break down. I mean, we all know this from history with Fed and the Fed and everything. Yeah, I always say that too, right? Is that, everyone's like, oh, bear market, it sucks. Well, yeah, if you're like a long-term investor, it's bad. And that's where I think we are. We're going to be in this kind of like sideways Brazil type market where Brazil had this crazy move up from like 2002 to 2008. And then since then, it hasn't made a new all-time high since 2008. So again, I don't know if it'll be 14 years before the US does, but I bet it's close to 10. And I think, again, you're going to see this sideways move. But going back to what I was saying is that within bear markets, the best opportunities arise. I mean, think back to Bitcoin when it was at 3,500 in the last bear market, then it ran to 69,000, and you can see these type of moves. So again, everyone should just be aware is, yeah, I mean, long-term investing may need to take a pause. I feel like they've had their day in the sun, right? Ever since the Fed was printing money, you could have just gone long and been happy. Yeah, so I mean, what's so crazy about this is that I try to use what I kind of speculate in terms of the forecasting and then look at the charts, right? I know you do the same thing. Is it cool if I show my charts?
Yep.
Let's see it. Awesome. So like one of the interesting things about the S&P chart here on the spiders is that we've had a pretty decent rally and we're kind of just up into this resistance now, right? So it's interesting because we're right into this level coming into the Fed. So you're either going to get a breakout where the SPY then goes up to this longer trend line that stretches down from the all-time highs, or the Fed's going to disappoint the market and then we're going to see this crazy drop back down where eventually I think we're going to this area over here, which was that pre-COVID February 2020 high. So it's really kind of showcasing, and I love how charts do this. They bring you to this point, and then it kind of coincides with this epic economic data or Fed decision or earnings announcement. And it's like, okay, well, it's either going to be a blast off or a crap out. And so I'm leaning towards a little bit more upside, But at the same time, I got to respect the fact that we are into some resistance here on the charts. Yeah, let me show that Brazil chart so everyone can kind of check this out, because it's really a remarkable chart, and the similarities with the run in the NASDAQ 100 or the S&P is crazy, right? So look at this run here and look at how vertical it was. And then if we go to like the spiders chart, or let's just do the SPX chart here, look at the vertical nature since 2009 of this run, right? So it's very eerily similar. And then if you look at what happened is, I mean, there were some great rallies. I mean, look at the drop and then the pop, and then, but again, look at what this market has done. Now, you know, like a lot of technicians out there, I'm keeping actually a really close eye on this chart, because if it ever breaks out, you could have a really nice bull run out of Brazil here. It hasn't yet, so you got to respect that. It's still in this kind of wedge pattern, but that is something that I'm keeping an eye on as a potential place to park some money, obviously, you know, within the proper allocations. But if it did break out and the US is kind of in this new bear market for longer periods, that could be a kind of a cool idea there for them. Wow. I'm not in that camp personally, but one thing I know is that, you know, I know nothing in terms, I mean, Bitcoin can do anything it wants, but at least per the charts, I'm definitely more in that groove of thinking the max upside here would be kind of around the 25,000 level. Yep. And if we take a look at the chart, you know, that would basically be taking us to the high end of this channel here. So we have a channel on Bitcoin. If you connect these highs, well, number one, the lows connect right out, then the highs. And it's this beautiful kind of bearish channel. And I think what's interesting about a bearish channel is that if we did rally to 25, guess what's going to happen? And you guys know this, like everyone's going to get bullish, but you're still within the channel, which is a bearish channel inside the last move down. And so it's almost ironic in that way of it has to sucker in enough people before you can get that next dump. So again, I'm not sure if it'll go to 25, but we are making what I would consider a small micro bull flag here, or in spirit of bull flag, which at least does favor some upside, maybe to 22.5, which would be first resistance here, and maybe upwards of that 25 level. But I'm still in the camp personally that I still don't think we've reached bottom. Being through the tech bubble back in, you know, 99, 2000, 2001, and the similarities with the dot-coms, it's just, crypto is just too, it would be too weird to, it's not enough of a flush out to get to finish out crypto yet to put in a bottom, in my opinion. Yeah, a little bit on the altcoins. Like I play around. I mean, my biggest core positions are usually ETH and Bitcoin, but I dabble in a little Solana, Avalanche, Cardano, Polkadot. You know, kind of like the second tier, not the biggest ones, but I just play around because those obviously percentage wise, you're going to get a bigger bang for your buck out of them than Bitcoin or Ethereum. So I do definitely play with those a little bit, and then you know I like keeping an eye on some of the new ones. Like Quant is kind of an interesting one. Yeah. You know, that's had a major run. I love the head and shoulders, the inverse head and shoulders that it had and how it played out to target. And basically, I'm keeping an eye on it in terms of if we get a retrace here, this would kind of be my zone for rebuy or buying it. So right around like 120, 125 right here, if it pulled back there, that should be a pretty good support. You can see this shoulder, head, and then shoulder, and then the breakout. And I think the coolest thing about this is for those people out there that, you know, just some of the cool stuff about technical analysis is to calculate the breakout target, take the lowest point of the head and draw a vertical to that line. And that distance will be the same generally, unless nothing's perfect, but in general, and it turned out to almost be to the dollar. That's the same distance there to there. And that's where you topped out right there. So kind of cool stuff in terms of technicals about how things work. And then for me, I honestly didn't even look at this chart until it was already breaking out. So by no means did I participate on the bullish side, but now it's on my radar where if it pulls back here, then I likely would be interested in buying it.